I want to share something I've seen many times. A trader studies for months. He finds a strategy. He backtests it. It looks good. He feels confident. Then he starts trading live. At first, small wins. Then small losses. Then bigger losses. And slowly, confidence disappears. So he thinks, this strategy does not work. But here is the question. Did the strategy fail? Or did the execution change under pressure? This pattern repeats everywhere. In Forex. In stocks. In crypto. Even in commodities like gold. Different markets. Same human behavior. Many traders believe their strategy fails. They believe the indicators are wrong. The entries are wrong. The confirmations are not strong enough. So they search. They search for a better strategy. A better signal. A better system. And for a short time, it feels exciting. New strategy. New hope. New motivation. But after some time, the same pattern repeats. Some wins. Some losses. Then confusion. Then doubt. Then the thought appears. Maybe this strategy doesn't work. I want to talk about that moment. Because sometimes, the strategy is not the problem. Sometimes the execution changes. And that small change creates a very big difference. In trading history, this is very common. Let me give you a simple example. In the 1980s and 1990s, many traders used breakout systems. Simple rule. When price breaks previous high, enter buy. When price breaks previous low, enter sell. Very simple. Some traders became consistently profitable. Others lost everything. Same rules. Same charts. Different results. Why? Because when breakout failed, some traders followed stop loss calmly. Others removed stop loss. Some waited patiently for next setup. Others started revenge trading. The strategy did not change. The behavior changed. This is not new. This is human nature. Let's separate two important things. Strategy and execution. A strategy is simple. It is rules. Entry rules. Stop loss rules. Take profit rules. It is written. It is structured. It does not have emotions. Execution is different. Execution is behavior. Execution is what happens inside your mind when real money is involved. Two traders can use the same strategy. Same entry. Same stop loss. Same take profit. One grows slowly and consistently. The other loses confidence. And loses money. What changed? Not the strategy. The behavior. This is uncomfortable to accept. But it is important. Because if we always blame the strategy, we never improve ourselves. Let's use gold as an example. On the 1-hour chart, gold creates a structure shift. Liquidity is taken. Trend changes. You enter a trade. Stop loss is placed correctly. Everything is logical. Now price pulls back 10 to 15 pips. This is normal behavior for gold. Gold is volatile. But you open 1-minute chart. Now you see. Small green candle. Another candle. Another small pullback. Your brain reacts. Maybe it's reversing. Maybe I was wrong. So you close early. Then what happens? Gold continues moving in your direction. Was the strategy wrong? No. The lower time frame increased emotional pressure. The market did not change. Your emotional state changed. Very important difference. Let's go back in history. Even famous traders talked about this. For example, traders like Jesse Livermore. He was active in early 1900s. He made and lost millions. He said something very simple. The market is never wrong. Opinions often are. Many times he lost not because system failed, but because he did not follow his own rules. This is not a modern problem. This existed 100 years ago. Now let's talk simple math. If your strategy wins 60% of the time, that means 4 losses in 10 trades. That is normal. But emotionally, after 2 losses, you feel uncomfortable. After 3 losses, you feel doubt. After 4 losses, you feel fear. And fear changes behavior. You close early. You skip trades. You reduce risk randomly. Now your statistics are broken. The system cannot perform correctly anymore. Not because it stopped working, but because you stopped allowing it to work. Now let's talk about something deeper. Let's say someone teaches you breakout strategy. Rule: buy when price breaks resistance. Very simple. But question: when does breakout work best? It works best when market is trending. When there is momentum. Now imagine market is moving sideways. Consolidating. No direction. Breakout will fail many times. If you don't understand this, you blame the strategy. But the real issue is context. Professional traders do not just memorize rules. They understand structure. They ask: is market trending? Is volatility high? Is liquidity present? Understanding gives flexibility. Memorizing gives rigidity. Rigid traders break under pressure. Understanding traders adapt calmly. Now let's talk about something very common. Jumping between markets. This week gold. Next week Nasdaq. Next week crypto. Every market has personality. Gold reacts strongly to US dollar movements and economic news. Nasdaq reacts to technology earnings and risk sentiment. Crypto reacts to liquidity cycles and speculation. Different rhythm, different speed, different behavior. If you constantly switch, your brain never builds deep familiarity. But when you stay with one asset long enough, you start recognizing patterns faster. You feel less surprised. And surprise is one of the biggest triggers of emotional reaction. Less surprise means calmer execution. Depth builds confidence. Confidence reduces fear. And reduced fear improves consistency. So what is the solution? It is not dramatic. It is not exciting. It is structured. Choose one asset. Stay with it. Choose one execution model. Master it. Use one main time frame for analysis. Stop jumping between 1 minute and 15 minute and 5 minute every few seconds. Accept losing trades. Before you enter, tell yourself, this trade can lose. And that is okay. When you accept loss before it happens, it loses emotional power. Journal honestly. Not just entry and exit, but emotion. Did you hesitate? Did you panic? Did you close early? Did you break rules? Over time, you will see patterns. Not in the market, in yourself. And that is where real growth begins. Maybe your strategy is not failing. Maybe your consistency is unstable. Maybe your discipline changes under pressure. And that is human, not weakness. Human. If you change strategy every month, you reset your learning every month. Mastery requires repetition. Repetition feels boring, but repetition builds stability. Searching feels exciting, but searching resets progress. Stay with one system long enough to understand it deeply. Stay with one market long enough to respect its behavior. And most importantly, stay patient with yourself. Trading is technical, but it is also personal. Sometimes the chart is not the problem. Sometimes we are reacting to our own discomfort. And once you see that clearly, trading does not become easy, but it becomes calmer. And calm execution is what allows a good strategy to finally perform.